Rotimi Fakayejo, Managing Director at Enterprise Capital Partners, joins us now to recap trading activity in today's session. Rotimi, thank you so much for joining us. So pretty much flat, you can describe it that way. But I think that the big takeaway is that volumes are still relatively low, even though we are in the earnings season. What's your take on market sentiment right now, and how do you see things evolving from here over the rest of this quarter?
Well, we've seen the Q1 result for some of the major companies, and many of them have actually validated the auditor report for 2018. That is, what we saw then is actually substantiated by what we have seen in Q1. And I believe very much that the sentiment now is there is really nothing so much exciting to stay off the market. We are going to be seeing a gradual upward movement and a corresponding downward movement thereafter. So we may not really move at a very fantastic rate, even whichever direction that you want to look at it. So for me, I believe the sentiment. Okay,
against that backdrop, how will you describe investors who are looking at equities right now? Where will you be putting your money in terms of sectors and specific counters?
To a great extent, the consumer goods sector is not actually promising as at now. We are not seeing very good numbers from Guinness. We are not seeing good numbers from Nigerian bureaus. And though what we from Nestle Nigeria PLC is quite impressive, but that is not enough. So invariably, investors may not really be looking at the consumer goods in totality, but I believe that the banking sector still has a lot to offer.
All right, and what's your view on the macro story? We continue to talk about that on the show. There's a view that everyone is waiting for the government to announce something exciting in terms of economic policy. Is that your sentiment as well?
I think that may definitely be a boost or a booster to the market. If, for instance, we see a situation whereby we have an overhaul of economic policies that everyone believes can drive the economy to the next level, has been said by the current government that is transiting to itself. So for me, I believe there are so many lapses that they need to look at, and a lot of investors also are envisaging the fear that there may be devaluation in order for government to be able to fund the new minimum wage. But all of these are still very much hazy until government comes out to say what they want to do. And that is exactly why the overhauling of the economic policies may be very important for now, in order for things to move forward.
But Rotimi, if you take a look at the oil price, and in the past we have seen the market rally somewhat in the same direction. If oil price continues to rise, we see the stock market doing relatively well, simply because investors are assured about the stability of the currency, and we see a lot of foreign cash pouring in. But given the concerns about the growth in the economy, do you think that trumps any positive moves we're seeing with the oil price?
I think a lot of other factors are in play aside from the oil price. Like what I just mentioned, if for those that actually boost the market, which is the foreign portfolio investors, if they envisage a further devaluation of the naira, they definitely will hold back. So until there is a categorical statement from the government that is not going to be, then definitely we will see the increase in oil price actually translating to more participation in the market.
All right, and what about the fixed income market? So we're seeing yields beginning to slide down. We're seeing quite a rally. If you take a look at the last 3 weeks in the T-bill market, do you get the sense that that is going to be positive in a significant way for the equities markets? Because as those yields continue to trend lower, there may be some investors looking for higher yields.
I think the fall in the rate is not, the slide in the rate is not so significant as such to translate almost immediately to more participation in the market. But I believe strongly that with time, we're going to see more participation in the market, and it's going to definitely be positive. So we hope that the trend will definitely continue this way until maybe sometimes in the after the Q2, we may begin to see a substantial change in the economy positively.
But, okay, let's look beyond the second quarter and the second half of the year, and by then the new government would have been sworn in, and we expect some changes. One change that some are speculating on is a move around the price of petrol. We know that is regulated at the moment. Do you think that is likely to change, given what is happening with the oil price? Because clearly that subsidy increases as the oil price rises.
Well, I think to me, I was discussing with a few colleagues today that one way that the government may want to fund the deficit resulting from the increase in the minimum wage may be through removal of oil subsidy. But I think also that will negate the promises that this very government has made to the people. So that may not really be the right route for now. But I think, give or take, they may have to tamper with the subsidy as at now.
All right, let's leave it there. Thank you so much, Rotimi, for sharing your perspective today. Rotimi Fakayejo, Managing Director at Enterprise Capital Partners.